Hello, welcome to the daily update. Today we're going to take a look at crude oil. First thing we note is the market is in a non-trend state and it is a neutral negative extreme signature state. So our attributes are more sideways, we've got more of a positive bias, and this is a negative extreme state, and we expect volatility to decrease. And one thing about the negative extreme market state is that the market is pressing lower, and the expectation is either for a bounce back into neutral, or we could have a transition into a negative bear trend state. So we're either going to get this positive reaction above the directional, or we are going to get a negative move and a new downtrend. So we're in neutral, we're at the lower end of the neutral zone, and we are either going to break through into the bear trend zone, or we're going to bounce back into more of a neutral posture. So next thing we want to look at is the structure of the market and sentiment. And here we see that sentiment is negative. The R level is equal to the upside pivot at 51.13, and so this skews the bias of the market state. So instead of having a positive bias, a neutral negative extreme, we're expecting to pop back with the R level above the market, we actually are more anticipating a negative shift. We're anticipating the potential for a move into a bear trend state. So the market, this R level defines the lid that's keeping the market under pressure. And the expectation is that the market is going to continue to search for its lower extreme. And if so, it's going to maintain a trade below here and kind of stair step lower on each successive major support level failure. And the market needs to break out above the R level to confirm an exhaustion of this neutral negative extreme. But as long as we're below here, we've got that negative sentiment bias. So because we have this negative sentiment bias, our optimal strategies are more on the sell side. We're looking to fade momentum into the R level as an optimal trade, and we're also looking to sell the market below the directional. And if we, any kind of negative reactions we want to continue to sell the market below the directional. On the hedge side, if we do get a failure or breakdown below the downside pivot, we're going to accept a reversal strategy, anticipating the market to bounce back into neutral. Market's extended on the downside, neutral negative extreme. If it can't hold negative structure, it's going to be a big part of any bear trend. If the market is going to transition into a bear trend, we would expect it to hold negative structure and build it. And if it breaks structure here, this could be a tell that we're bouncing back into neutral. And the other hedge strategy would be to buy the market in a breakout above the R level, because that confirms that yes, we are on a bigger scale bouncing out of this neutral negative extreme into more of a digestive market state. So picking up the market at 7:20 a.m. Central Standard Time, we see that the market was above the directional and then transitioned lower through it and has been holding negative structure since. So we know the market is neutral negative extreme. It's either going to bounce back into neutral, or on the optimal, we may be at the start of a negative transition. Sentiment bias is negative. We're looking for tells. What's going to happen? Is it going to trend lower or bounce back into neutral? And at the moment, our tell is that the market's below the directional and it's building negative structure below that price point. What's important to note here is the variance in front of this inflection point. Take a look at our tutorials on the playbook, and we look at entry strategies, talking about this entry EXAD, entry exit adjustment differential. If we look at this zone as kind of a heat map around the inflection point, we have a variance and a optimal area to enter in. So in the crude oil, look at that variance as more of a slippage area. So let's use 4 ticks as slippage for crude oil, and for the entry EXAD or alert distance, around this inflection point. Let's use 20 ticks. I've highlighted the EXAD zone on the chart using the 20 tick metric as an alert distance, so 49.77, and then I've highlighted also the variance here. Also noting that sentiment is negative, and then below the directional we maintain negative structure, and with that negative structure, if the market maintains a trade below this price point, then our expectation would be one average price map distance, so at least down to the DP. If you have any tactics that are producing negative signals in this zone, this is definitely an area to accept sell signals. Anywhere within this alert distance or EXAD zone is a qualified sell signal, versus accepting the sell signals outside the zone, you're away from structure. So this EXAD distance can give you some sense of where you can accept signals. And then if you're accepting signals within this zone, what's the opportunity? And the minimum opportunity you should always look for is one average price map distance. And if you ever question that, you can always just take the upside pivot and subtract the directional to get a sense of what segment moves the market's trading in currently. The EXAD also provides us with a sense of structure. So as we're looking at the directional, does the market go through that variance? And in this situation it does, and so it's just kind of a good confirmation sense. So as we move forward in time, the market pushes more into that area, and then so as long as we're in this zone, you're able to accept sell signals. It is in line with the sentiment bias. It is in line with the optimal theme of a negative, potentially negative move, searching for support. And here the market trades lower. At this point, we need to make some decisions. I've drawn in the EXAD variance off the downside pivot of 48.81, so up to 01. And here, the expectation is the market may be building a negative trend. And so if we know that our target objective, our minimum target objective would be from a move from the directional down to downside pivot, we know that we're anticipating potential support here and a bounce. It is in a neutral negative extreme, and one of the attributes of this state is potentially sideways. So the momentum can be more sideways. So what do we do on our risk management? So this, the fact that the market did hold some structure here, it should build negative structure and it should just go. And if it doesn't, maybe we're going to be in for more of a sideways action. So that's something to consider. And so as the market, we move forward in time, and the market is approaching a buy zone, all of a sudden any shorts from here, what is our profit give back? If we're looking to make, if we know that once we approach this 01 level, we're coming into the kind of the support band, what are we willing to risk for this amount of money to be made? And that's always a key consideration. So as the market approaches this level, where is our stop adjustment? And the price map provides you with kind of a natural place to adjust your trail stops down to. Here the market gives us a positive reaction, and it comes back through our inflection point, telling us there's a break in the immediate momentum. Again, the negative momentum for the session is still below the directional, so this is the lid for any long-term negative trend potential that may be happening. But for now, there's a break here, and that's something to be considered for position management. Moving forward in time, market, this kind of action here, the tell was at this break that we might be in for some digestive action. That might be all we get, and the market could continue lower. Here the market continues to correct. Again, you can see the market working this structure point, and we get a play back to the very edge of the EXAD zone, kind of the gravitational area of the directional, and the market starts to sell off. So at this point here, it's another sell signal. It's kind of the resumption of this negative momentum is starting to build. Again, we're always looking for tells to what theme is in play. If the market was in a hedge theme, we should be bouncing above the directional and breaking structure and trying to move back. If we're moving into a potential bear trend situation, we're looking for tells that the market is holding negative structure. And on a larger scale, this is a kind of a resumption of that negative bias, the negative structure. And the market continues to move lower. We're not looking to fade any momentum here. The market does attain kind of a minimal target. But again, we see this small confirmation of this inflection point. So I've flipped the EXAD, so we've got that alert distance variance below the downside pivot inflection point here. Bring us down to 61. So the market came through that distance. It's a good break in momentum there through the downside pivot. At this point, the market is confirming this optimal strategy theme. As long as the market sustains trading below the downside pivot, we should expect negative follow through. And we know that this 1-star number at 48.23 is a confirmation point for a downside breakout. So as we move forward, the market is showing us structure here at the downside pivot. You can see how it kind of works within this alert distance. And it comes down to the 1-star level. So at this point, the market is making a decision. This is the confirmation point for an extended breakout. Is this going to contain the market, or are we in for a downside move? What time is it during the day? It's after 1. The market has made at least a 1 APMD plus, and here we get a outside bar telling us that we might get a reaction. So at this price point, you need to make a decision on profit give back. We could see a bounce back up from the 23 level back up to 81. How much of that profit are we willing to give back? And we know that this is the confirmation point, so that's something to consider. And the market provides a reaction, and we move back into the EXAD zone, and the market trades around the downside pivot into 4 o'clock, just kind of confirming that this downside pivot is a key structural point for the market. Again, the holding of this 1-star level is a good tell that we weren't going to get follow through. So when the markets are at those critical inflection points, really dialing into your tactics, figuring out what am I willing to risk for a potential reaction. Absolutely, we don't know what the market can do, and we may be shifting into a trend. If we're at this point earlier in the session, potentially being more aggressive. But again, it's all reading the tells of the market, what strategy theme is playing out, and aligning your tactics with that theme, and executing ideally at the major structure points and realizing the EXAD variance around these inflection points. If you have any questions on how to integrate your trading tactics into the market state and structure, please feel free to contact us at info@jsservices.com. Thank you and good trading.